The National Institute of Credit Administration, NICA, has raised concerns about the detrimental effect of high interest rate loans on the viability of small and medium enterprises across the country. And joining me now to discuss further on this is the Chief Executive Officer of the National Institute of Credit Administration, Professor Chris Onalu. Thank you for joining us on Business Daily.
Thank you so much. Good morning. Thank you for having me.
You're very welcome, sir. Let us start off with, measures that NICA is proposing, especially to encourage lending institutions to offer more accessible loans to MSMEs across the country. You are the Chief Executive Officer of NICA, and I think you're the best person to, give us information on that. So let us hear from you. What is NICA proposing?
Thank you very much. As a professional body that is responsible for the control, supervision, and regulation of credit management profession in Nigeria, our commitment to seeing that we have a balanced economic system for the development of our country, which affects everyone, is sine qua non. Over time, we've been talking about how to move the landscape to a different perspective, the landscape of being an economy that has been running on cash and carry for a very long time. In fact, since independence, we felt that as an institute, our commitment is unalloyed. We need to make a quick change, which I believe Nigerians has been advocating for. Over time, cash system hasn't helped us. We have successfully moved our governance system from dictatorial to a much more vibrant democracy, even though it is still going through a teething problem. But we have left the economy behind, and that is most unfortunate. We can see, however, the light at the end of the tunnel, given what the present government in Nigeria is doing at the moment, craving to move the economy from cash-based system to absolute consumer credit system, leading to a full-blown credit economy system. That is quite encouraging. And in the face of this, we have suggested very strongly that in any country, it is the small and medium enterprises that holds the us. They are the resilient factor in the economy. They are the one that makes the economy robust. They are the one that keeps the economy on a sustainability line. And I think it is commendable that we see the government taking in that direction. We have consequently suggested establishment of the National Credit Guarantee Corporation, or in order not to reflect our name, we said it should be a robust, well-established, well-funded project by the government, which will be called Federal Credit Guarantee Corporation. Yes, over time we've had pockets of credit guarantee scheme here and there, but they all have not, even if you combine them together, they have not all addressed the basic need of the economic revitalization. And so we felt that, as it is in other climes, the government of Nigeria at the federal level need to solve this problem of scarcity in production, poor access to credit in this country by setting up a mechanism that will attract lenders in this country to begin to lend to the SMEs who do not have collateral security to access loan. Yes, we have a lot of money out there. If you look at the balance sheet of all the banks in this country, what they post on an annual basis, you begin to wonder why then is the SMEs lacking access to funding. And the reason is because we have our own central bank. No central bank anywhere in the world will authorize any commercial bank or deposit money bank to lend to any sector, regardless of the amount involved, without security or collateral backing such lending. So that is a situation this country has found itself for a very long time, and the National Institute of Credit Administration is of very strong opinion that the best way possible we can go to revive the economy and deliver acceptable standard of living, eliminate poverty from the land, because people were operating a capitalist system. People are committed to identifying, to discovering themselves what they can do to create jobs for Nigerian people, to create job and wealth for their family, and thus contributing to the GDP. That way to go is the establishment of a federal credit guarantee corporation, well-funded under the full faith of the federal government. We can do that. And that is where we stand as a professional body. Thank you.
Well said, Prof. You have, emphasized on the importance of MSMEs generally. Like you rightly stated, they are indeed the backbone of the Nigerian economy. But now let us talk to, insights as to how MSMEs can avoid, resorting to predatory lending services amidst the limited access to affordable financing options in the country. We understand that these days, the options with regards to access to finance are limited. But how then can, MSMEs, avoid resorting to predatory lending services across the nation?
Well, I may reverse that statement. If you talk about predatory lending activities or practices, it's much more on the side of the lenders themselves. Anywhere in the world, people taking credit, if they have their way, they will divert the outcome, and they will divert the proceeds to something else, such as personal funding, family funding, holiday funding, etc. And so the mechanisms has been put in place to checkmate that. But in Nigeria, we have a situation where people walk into a credit provider institution, ask for credit line, and there hasn't been any information collected in terms of the capability of the takers of the loan to repay back the facility. The short structures hasn't been put in place. And I also want to connect this to the ongoing effort by the federal government to establish consumer credit system in the country. And it's coming with so much to care for, so much mitigations. You can't take credit from the day one. You are taking credit that you are going to pay back, except some 5 C's, one or two of the 5 C's of credit apply to it. Otherwise, before you take credit, the information about you is in the public domain, restricted to the use for which it is taken, which is credit, and then you really cannot afford to default in the repayment arrangement. You cannot, because it will damage your reputation, it will repudiate your reputation, it will bring you to shame, you will not want to attempt it. And that is normally the creation of the credit provider themselves. And what we have so far is, lending to the people lending, classmatism, comes to play, members of the same club, it comes to play, and so on and so forth. So you don't give credit to the people that you have not put in place mechanism to checkmate their conduct, their behavior, and all that. So there is no predatory on the part of those who take credit. If you like, you can call them borrowers in terms of financial credit. And we do not want to actually emphasize one side of credit, because it is economic-wide. You have credit in manufacturing sector, oil and gas, communication, the farmers, and etc. So you have credit everywhere, but one common place that everybody comes to ask for financing is the banking sector. And I think I want to use this medium to encourage the banking sector to be much more professional, much more creative, much more innovative, much more current in the structure for credit, and so that there will be minimal default. So there is nothing predatory on the part of those. In fact, those who, from the consumer credit point of view, if you look at the market women trade association, vulcanizers, cottage business owners, etc., records have shown that they are more likely to honor credit than even the high-profile, well-structured business organizations. I also want to connect you to the experience of the Asset Management Corporation of Nigeria, who has been trying to recover money that people owe the bank and they couldn't pay. And what they said is that rather less than 300 people of the entire population of Nigeria are the people holding the country to ransom. Less than 300 people has been able to borrow more than 6 trillion naira. So you can see this can't be traced to the informal sector, nor below the informal sector. And I said before, the micro, medium, and small enterprises, they are the one that holds the arts. The moment this country, the leadership of this country turn around to focus on the development of the SME and bring them into the mainstream of economic activities, the better for this country. People will now begin to say the Nigeria of our dream has come.
Okay, Prof, quickly now, because our time is fast spent. You touched a bit on the banking sector, but we are curious to know, the plans that the National Institute of Credit Administration has, to collaborate with either the banking sector or the Central Bank of Nigeria, basically, to address the concerns raised regarding the recent increase in the MPR. What is NICA planning, or what are the collaborations that NICA is currently forming?
Our advocacy has always been lower interest rate for the micro, small, and medium scale enterprises. The need for interest rate to be at a single digit, and so that they can borrow and pay back with easy. You can't borrow at very high interest rate. What kind of business are you committing that fund into? And this underscores why we are advocating for the federal government of Nigeria to establish a federal credit guarantee corporation, because there you control the interest rate, because the risk of lending to this sector, this group of people in the economy will be moderated by the intervention of the federal credit guarantee corporation. That gives the both party, the three party in this case, the borrower, the lender, and the credit guarantee corporation, to negotiate on what interest rate should be, because the Federal Credit Guarantee Corporation is participating in reducing the consequences of not being able to pay by the borrowers. So that becomes very effective, not the way it is. I don't see anybody borrowing at a very high interest. Whatever the regulator is doing now, the central bank and the banking community themselves, however the interest is lowered, it is not yet good for the SME. It might be good for the multinational, it might be good for blue chip company, conglomerate, etc., and those who has the capacity to provide the collateral. It might be good for them, but on the long run, at the end of the day, you find that they will still consider Nigeria as a very high. Cost of business in Nigeria is quite high, and that may not be good for our country. It may not attract the foreign investor that we want. So, but if we have lower interest rate, and I think the central bank can go further to reduce the interest rate. And then, of course, there are two sides of the coin there. The first one is what the bank charges when they are giving you money that is not theirs. They are lending the money to you. And then what the owner of the fund, like you and myself, if I have some millions I want to put in fixed deposit, and what do I expect the bank to pay to buy that money from me for the time being? So these are the two sides of the coins. We need to have a balanced situation in this effect. I know you are running out of time. Conversation is quite deep. Credit management is so broad, and that is what we are saying. It is a next regime of economic life for this country. Thank you.
Indeed. Thank you, Professor Chris Onalo, who is the CEO of the Nigeria Institute of Credit Administration. Thank you for your insight on the program this morning. And this is where we draw the curtains on today's edition of the program. But Business Daily will be with you again tomorrow. My name is Chiamaka Enendu. Thank you for watching, and bye for now.